Welcome to the Organic Crop Insurance 101 webinar hosted by OATS, the Organic Agronomy Training Service. This event is being recorded and will be posted online. I am Mallory Krieger, National Program Director with OATS. OATS is a collaboratively managed training program for agricultural professionals working with organic and transitioning farmers in the United States. We seek to grow domestic organic production by strengthening the educational support network of agronomists, certified crop advisors, extension agents, and technical service providers. Our aim is for every transitional and certified organic farmer to have robust access to technical service expertise to provide unbiased, science-based agronomic support for their farming operation. If you would like to keep up to date with the events and happenings at OATS, please subscribe to our mailing list, and I am dropping the link into the chat. And so you can join our mailing list at www.organicagronomy.org/subscribe. We have some great programs ongoing on many topics. You can listen into our monthly Organic Advisor call series where we interview farmers and experts, or join in the discussions at our Organic Advisor listserv. We are also currently enrolling participants in the Organic Field Crop course, a training program for ag professionals who want to better serve organic field crop farmers. Enroll by March 20th to secure your spot in the next class. In addition to today's webinar on organic crop insurance, OATS is also developing a podcast series exploring the ins and outs of crop insurance for organic producers. And we are launching an online video-based course on organic crop insurance topics for ag advisors as well. I would like to extend many thanks to the USDA Risk Management Agency for providing the funding to develop and host these organic crop insurance education programs. In today's webinar, we will begin with an introduction to federal crop insurance we will begin with an introduction to the federal crop insurance program by USDA RMA organic specialist Sarah Kleithermes, followed by a talk by organic crop insurance agent Megan Vaith on specific programs available to producers in this region. We will then be joined by Nate Powell-Palm, an organic farmer in Bozeman, Montana, who will share his experience with selecting a crop insurance program for his farm. We will have time at the end for questions and group discussion. If you have a question during the presentations, please drop it into the chat and I will be sure to get it answered. With that, Sarah, would you tell us a bit about RMA and the federal crop insurance program?
Yes, thank you, Mallory. So my name is Sarah Kleithermes. I have been a crop insurance ag specialist for 14 years. I'll start my 15th year this summer. I am centrally located in Missouri, and what I do with RMA is primarily work on the crop insurance policy and any educational materials that go along with those changes. So my first slide here, it's just some basics about the crop insurance program. What RMA does is we work with legislators and congressmen to create crop insurance regulations and modifications to non-regulatory policies. So an example of a legislative or statutory change would be a farm bill. So a farm bill should be coming up pretty soon, and then folks like me will take those changes and incorporate them and make the best crop insurance program that we can for producers within that statute. Another example of a change that I work on would be an administrative funding change, and this is the Transitional and Organic Grower Assistance Program, and this is something that's going to be covered later in the presentation. So here, if you check out my first slide, what the crop insurance coverage is for is naturally occurring weather events. You can see that most of the losses that we cover are for flood and drought cause of loss, but we also cover things like very high winds, like a derecho or a tornado, and also hurricanes. Next, you can see I'm sorry, I hit a wrong button. Excuse me. So the next bullet point I want to talk to you about is what we do. So I talked about the regulation part of the program. We work with private insurance companies to sell and service the program. So we have a standard reinsurance agreement with companies. For example, Rain and Hail may be a crop insurance company, and Great American may be another one. And we work with them to have their agents with the boots on the ground selling and servicing the program. So their insurance agents may sell for more than one, or I'm sorry, there are insurance agents with their own company, their insurance company, and they may sell both Great American and Rain and Hail insurance. And lastly, the loss adjusters are part of that combination as well. So when there are losses, the loss adjusters will go out and assess the loss, and so then the producer can be paid. And my last bullet point here, it just shows how much the crop insurance program has grown since 2000. Right now, we are looking at $190 billion in liability today. The next slide I want to talk about is roles and responsibility of RMA. You can see the first bullet point, it talks about developing policy terms. So that would be me. In addition to folks like me, there are also those who create the rates and prices for the program. And we also work on new products and program expansion, data collection for those programs, and auditing and oversight of finances and market behavior. So some compliance is built in too. Now, RMA is the primary reinsurer, and as part of that role, we compensate insurance companies. Next are the roles of the insurance companies and agents, and I did go over a little bit of this high level. So I mentioned insurance companies. There's multiple insurance companies out there. They are in charge of their sales, their claim work, and also quality control, and assuming the risk for program integrity. And then more of the boots of the ground folks are going to be the crop insurance agent. And I did mention they can sell policies and sell policies for more than one insurance company. And you're going to see these folks out and about because they are the face of the program. And that's who you're going to see rather than the insurance company staff. And again, I already covered that they write for most companies. So the next slide is farmer producer. So what is their role? They're going to buy the policy from that insurance agent, and then they will provide their production history to help create a better, accurate insurance program for their farming operation. And then they also are in charge of, planting their crop. And once they plant their crop, they'll need to report the acreage for their insurance. And then once that's gathered, then they will be billed a premium for that insurance product. And if there is a loss due to a naturally occurring weather event, then they can provide that notice of loss to the agent in a timely manner. And then later the loss adjuster will come out and review that loss, then they can receive the loss payment. And this is a really neat graphic I would like to show you. It really illustrates how much the organic program has grown since 2013. You can see the policies started at just about 5,500, and really to 2022 has grown to a little over 11,000, and that is huge. And so you can see the acreage also follows that same trend. So this is a really great illustration showing how far organics have come. And this is a fun slide for me. It shows the top 10 organic crops for our book of business. And you can see we start at corn and go to citrus fruit. So depending on what crops and crop insurance program are available where you are, you may find some of these statistics interesting. So this shows the number of acres, liability, and premium for those programs. And I do want to note there's a graphic on the side here that says producers have purchased organic coverage for 70 plus crops. We have more than 70 crops that are available for organic insurance. So on almost all of our crop programs at a county level, we have organic transitional and organic certified farming practice. And so that's what's going to allow the special coverage for your organic crop. So if you are interested and want to know more about what is available in your county, we can definitely find a combination of organic certified or organic transitional for you. And then I'm going to go ahead and turn it over to Megan.
Yeah, thanks, Sarah. So like they said, my name is Megan Vaith, and I own Northborn Organic Crop Insurance, which is a crop insurance agency for organic farmers. So Sarah talked about the different structures in crop insurance, like the crop insurance company versus the agent. I am the agent, so I'm the one with the boots on the ground, talking to the farmers about what policy options are available for them and filling out all the paperwork as the year goes on. So today we are going to talk about how a crop insurance policy works for a farmer, some insurance options that are available specifically for organic farmers, some recent changes in the crop insurance world, along with the transitional and organic grower assistance program that's available for 2023. So what is crop insurance and how does it work? Crop insurance is a policy that's available to protect farmers against any sort of natural peril. Sarah already touched on this, but most often it is a weather-related event like excess moisture or drought, could be hail or wind or a different type of weather event as well. But it can also protect you against a revenue loss if you have revenue protection on your policy. Coverage options are available from 50% to 85% in 5% intervals. So this allows farmers to choose from a multitude of options to choose a guarantee that fits what they need on their operation to cover their input costs. Premium subsidies vary by level of coverage. So as you can see on the chart on the bottom, this shows what subsidy levels are covered for each coverage level and unit structure. So I'd say most farmers fit under either optional units or enterprise units. So for simplicity's sake, we'll just look at the enterprise unit column and then go over to about 75% coverage, since that's a pretty common coverage level. And you can see that it is subsidized at 77% for producers that purchase 75% coverage level under enterprise units. This is meaning that the farmer is only paying 23% of the premium on this crop insurance policy. Policies are available by crop and county. So this gives producers options to maybe insure one crop and not another, or one county and not the other if they choose so, or they can insure all of it. You could have insurance structured differently with different coverage levels per crop and county that you have in your operation. So why is it important to buy crop insurance? Why are we talking about it today, making sure that everybody's aware of the options available? Crop insurance is the only input cost on your operation that can actually guarantee you some sort of revenue. So you can plant all the seed and apply fertilizer and all the necessary inputs on your operation, but if a disaster strikes and you have no yield at harvest time, those other input costs aren't going to pay you anything at the end of the year. So crop insurance is really important to be considered an input cost on your operation so that you can be guaranteed at least some sort of revenue at the end of the year if a disaster does strike. So here's an example of how a crop insurance policy can work. On the left, you can see how we calculate your bushel guarantee. This farmer has an approved yield of 200 bushels per acre on corn. And this is calculated by taking his last 10-year average. So over the last 10 years, this farmer had an average yield of 200 bushels. You take that times the coverage level of 80% to get a bushel guarantee of 160 bushel. So at harvest time, if this producer is combining and he gets less than 160 bushel per acre, he will trigger a claim. Then on the right side, you can see how we calculate the revenue guarantee. You take that 160 bushel that we just calculated it, and then multiply it by the crop insurance price. And this was the crop insurance price as of 2022 of $11.72 to get your guaranteed revenue of $1,875. On a revenue protection policy, this coverage can change throughout the year depending on where the harvest price lies. So those previous calculations were on the spring projected price, and this is what happens based on the harvest price going higher or lower. So you can see on the left, here's an example where the harvest price went from the $11.72 projected price all the way up to $12.80. Farmers under revenue protection are able to insure their crops at the higher of either the spring or the harvest price. And so in this example, the farmer substituted that price for the harvest price of $12.80 to get a guaranteed revenue of now $2,048 rather than the $1,875. On the right, we see a calculation for if the harvest price is actually less than the spring projected price. Here we calculate this by taking the original guaranteed revenue divided by the harvest price. In this example, I used 1075 to get a new bushel guarantee of 174 bushels. Now, at harvest time, instead of having to fall below 160 bushels, the farmer only has to fall below 174 in order to trigger a claim. This calculation might seem a little bit goofy, but realistically, with lower prices, it takes more bushels in order to achieve that same revenue source. So now, with the harvest price being lower, our bushel guarantee actually increases a little bit. So we just talked about revenue protection, which in my opinion is kind of the premier crop insurance product that farmers are able to purchase. So can farmers get crop insurance, revenue protection crop insurance on all of their crops? Corn and soybeans are available in most areas. And then when you get more specific into more specialized crops, it is available on a county by county basis. So here's an example from the Risk Management Agency on crop insurance coverage availability for corn. The green areas on this map show what counties coverage is already available in. So if you're farming in this county and you want to plant corn for the first time, you can get insurance without any problem. If you're in one of the white areas, there are other avenues that you can go in order to obtain crop insurance, but it's not just readily available for you. Then we get into soybeans, which isn't covering as much of the US, but it is still fairly well covered in the areas that actually grow soybeans. So fairly easy to obtain coverage. Then we get into oats, which covers a different part of the US, but still a decent chunk of it. And then you get into sunflowers, which is a little bit more specialized crop, but expanding. And here we see there's really just a strip down the middle of the US where coverage is readily available. So if a farmer is wanting to plant sunflowers and he's in one of those white areas, what options does he have in order to get insurance? There are two main options for this producer. He can either pursue a written agreement or he can purchase whole farm revenue protection. Written agreement is a way for a farmer to request individual coverage if the crop isn't insurable in that county. So on that example we just looked at with sunflowers, if he was in one of the white counties and he wanted to plant sunflowers, he could actually pursue a written agreement to try to obtain coverage on that crop. These are due by sales closing, which is September 30th for most fall planted crops and March 15th for most spring planted crops. The agent will work with a farmer to prepare a packet of information and submit it to the crop insurance company to get the crop insurance. This does require some supporting documents, which we'll go over on the next slide. One important thing to add here is written agreements are necessary to expand the crop insurance program in the future. So if farmers are questioning why coverage isn't available in their county when maybe there's a handful of farmers there that are growing that same crop, one of the first things that RMA is going to look at is whether written agreements have been submitted in that county for that crop. And if no written agreements have been submitted, that's kind of telling RMA that there's not a need for crop insurance in that area. So in my opinion, I think submitting a written agreement is a really good path to get yourself individual coverage and help expand the program for the future. I should add too that that is not the only way that RMA expands the crop insurance program, but it definitely is one of the things that they look at. Here's a list of the requirements involved in submitting a written agreement. So one of the things is you need to list the date that the crop is normally planted, the name, location, and approximate distance to the place that you're going to deliver the crop at harvest time. If the crop is irrigated, you need to list the main water source and the method of irrigation. And then the crop history, which is what most farmers get hung up on, is that you have to verify that you have at least 3 years of crop history, either on the crop that you're requesting or a similar crop. And this isn't a crop that you get to decide if it's similar or not. There is an approved list in the written agreement handbook as to what can be classified as a similar crop. And as long as you have 3 years of history of either the crop you're requesting or a similar crop according to the RMA list, then you will be eligible for a written agreement in order to get insurance on those acres. If the farmer doesn't have history and he's farming in an entity and someone who has 10% ownership in that operation has history of either that crop or a similar crop, he can use that history in order to qualify for the written agreement. Soil maps are also a requirement as well as a letter of adaptability from an ag expert. And this oftentimes comes from a certified agronomist or a conservation specialist. Here is a list of similar crops for canola. So if a farmer was planning to plant canola and he either didn't have 3 years of history or he had less than 3 years of history of canola, as long as he has history of any of the crops listed here, he will qualify to submit a written agreement to obtain insurance on those acres. You can mix and match the different crops in order to qualify. So if a farmer has 1 year of history of barley and 2 years of history of oats, you can mix those together to qualify for your 3 years of history in order to get crop insurance coverage on your canola for the next year. Here's a similar screen that shows the approved similar crops for sunflowers, and these can all be intermixed too. So if you're looking at planting popcorn and you don't have any popcorn history, these are all the same similar crops that you would see for popcorn. So you would just replace popcorn for sunflowers on this slide. Whole farm revenue protection was listed as the second option on that slide for what to do if revenue protection isn't available in your county. And whole farm revenue protection kind of takes a whole different look on crop insurance compared to your standard revenue protection policy. So typically we are insuring a certain yield that we're going to produce by the end of the year. Whole farm revenue protection takes a look at the overall revenue for your entire operation. So your guarantee is going to be based on your previous allowable revenue versus your expected revenue. And when we talk about allowable revenue on whole farm revenue protection, we talk about the revenue that pertains specifically to the crop. So in order to prove what your allowable revenue was for the most recent 5 years of history, you need to submit 5 years worth of Schedule F tax history. So when you look on your Schedule F, there's going to be revenue from sales of products, and then there will also most likely be revenue from farm programs, maybe through the FSA office or custom hire that could be on there. Those ones will not be counted. It is solely revenue based on that specific crop. So like I said, in order to receive whole farm revenue protection and insure your crops under this structure, you have to have 5 consecutive years of farm tax history. But beginning farmers do get a little bit of an exception where they only need the 3 years of history to help them get started out. Coverage options are available from 50% to 75% unless you have 3 or more commodities on your operation. And if you do, then you are able to purchase 80 or 85% as well. And this also qualifies you for a whole farm subsidy discount, so that makes your premium a little bit cheaper as well. One of the main benefits to whole farm revenue protection, as it covers virtually any crop. There's a very short list of crops it doesn't cover, like timber, livestock for show, sports, or pets. But otherwise, if you have livestock on your operation, this is a good way to get them covered as well. So this is really ideal for the diverse farmer because, as we're all aware, organic farmers tend to have more crops in their rotation and maybe more specialized crops than a conventional farmer is used to farming. And so this is a good way to get insurance on maybe those more specialized crops that you can't get revenue protection on, or maybe you don't have the history to qualify for a written agreement on. Some of the big downsides to whole farm revenue protection is that there is a lot of paperwork involved. In order to even get a quote to see what coverage looks like for your operation, you will need to submit those 5 years of tax forms. And then there's other paperwork throughout the year that you would need to submit as well. RMA has lessened the paperwork load on this policy, and they keep looking at it every year to make improvements. So I'd say it's better than it was, and it's not a reason to shy away from the policy, but maybe just something to be aware of. Another downside to whole farm revenue protection is that claims are more delayed under this structure than your typical revenue protection. So typical crop insurance, a farmer harvests the yield in the fall, and if his yield is less than what his guarantee is, he's going to call his agent, file a claim, the adjuster is going to come out, fill out the paperwork, and then they will cut a check to the producer, all in the fall. On whole farm revenue protection, since everything's based on your tax return, you will not be paid out a claim until after your taxes are filed for that year. So instead of getting paid in the fall like you're used to, under this structure, you would not get paid out until the following spring. Contract pricing is one of the biggest benefits, in my opinion, that organic farmers have available to them. And this allows them to insure their crops at their specific contracted price. So it's a way to really individualize their crop insurance coverage instead of taking the RMA price. So without a contract in place, farmers use the RMA established price to calculate what their revenue guarantee is. And so this price is calculated based on the conventional daily closing price on the Board of Trade for the entire month of February. They average it together, and that is what the RMA established price is. Then to calculate the organic price, they take that by a factor. So they used a factor of 1.878 on corn this year and 2.056 on soybeans versus what that conventional February average price is to come up with what the crop insurance price is for organic commodities. In order to use contract pricing instead of that RMA price, farmers must have this special option on their policy by sales closing, which is March 15th for most spring crops, so it's coming up really quick. Then they need to submit their contract to their crop insurance agent by acreage reporting deadline, which is most often July 15th. What's really nice about this policy is that what I always suggest is to make sure that you have it on your policy, contract pricing, just have it on your policy in place in case you want to use it. If you don't have a contract by July 15th, or maybe your contract is lower than what the crop insurance price is, you just don't need to submit your contract to your agent. And if you don't submit it, then you don't pay any extra premium by having it on your policy. So kind of like if you don't use it, you don't pay for it. So you might as well have it just in place in the future if you want to use it on your policy. Contract prices are capped at 1.5 on corn and 1.75 on soybeans times what that organic crop insurance price is. But from what I have seen, there are hardly ever any contracts that go above and beyond what these caps are. So it's really not a concern, but maybe just something to be aware of. Here's an example from last year on how using contract pricing on a crop insurance policy can really change your guarantee. So on the left, you can see this farmer has a bushel guarantee of 48 bushels multiplied by the spring crop insurance price, which was $27.41 in 2022, to get a guaranteed revenue of $1,315. This farmer, however, was able to get a contract on his soybeans for $38 a bushel. So since he had contract pricing on his policy and submitted his contract to his agent in time, he was able to substitute that price for $38, which gave him a new guarantee of $1,824. Pretty simple way to get an extra $500 of revenue in the year that is guaranteed. This worked out really well for farmers that had losses last year because their losses were then paid based off of the $38 price instead of $27.41. Oftentimes we don't see this big of a difference between the crop insurance price and the contracted price. But last year was one of those times that it really did make a difference for farmers by having this on their policy. Pasture, rangeland, and forage insurance is also kind of a whole different way of looking at insurance. So this insures any perennial haying or grazing acres that a farmer may have on their operation. And this is solely based on lack of rainfall in the area. This policy is index driven, which means that they have looked at the NOAA weather data for each relative area all the way back to 1948. They have taken the average rainfall or moisture for each area back from 1948 to now to come up with an average index of 1.0. The highest coverage level you can get on this policy is 90%. So anytime the rainfall for a time period that you select falls below 0.9, you automatically trigger a claim. This covers a grid area, which is typically 17 by 17 miles. So the moisture numbers that are calculated might not reflect your actual farm's rainfall, but they still will be relative to the area. In order to insure under this PRF insurance structure, you have to select at least 2 different intervals of 2 months each. So I see a lot of farmers that think their cows are going to be on pasture in the summer, so they want to make sure that they have the summer months insured. So they choose May, June, and then July, August to insure their crop. But you are not maxed out at 2 different intervals of 2 months each. If you want to insure the entire year, you have the option to do so. One of the main reasons I really like PRF is it actually allows for more flexibility than other crops do in the crop insurance world. So if we're talking about corn, If you have corn on your crop insurance policy, any acre planted to corn has to be insured in that county. Under PRF, you can actually pick and choose which acres you want to insure. So you don't have to insure all or none. You get to pick and choose, which is really nice. One of the other main things that I like about it is that the producer doesn't have to report any yield or rainfall history, so it's pretty stress-free on the farmer. So as long as the weather data tracked by NOAA falls in below 90% of average, a claim is automatically opened up with the crop insurance company, and then a check is cut, typically about 60 days after the time period ends. Sales closing on pasture rangeland forage is December 1st. And so if this is something that might apply to you or your farmers, I would suggest looking at this in the fall, and you will have to have it in place by December 1st of 2023 in order to have insurance in 2024. So here's an example about how pasture rangeland forage could work for your operation. So this is in Custer County, Montana, and that first column there shows the year. So you can see it's a 10-year average on how this policy would have paid out. Then that second column is the indemnity, which is the amount of insurance payment that was triggered. And then we see the premium, and the premium on this policy was about $7 per acre on grazing land in this area. And I will say that when I ran these numbers, I ran it at 90% coverage and 150% productivity, which is the highest level you can go. And how I structured this policy was by putting 70% of the acres in June, July, and 30% in November, December to come up with these numbers. Then that last column, you can see the profit loss scenario for how the year ended up. And so you can see 3 out of the 10 years, the farmer had to pay in the premium. 1 year he was even, and the rest of the years, he ended up making a profit on the operation based on this policy. Not a lot of people know that this policy exists, so I think it's just really important that people are aware that there is an insurance option, and it's actually a pretty cool one too, where there's not a whole lot of tracking involved for the farmer, so not a lot of legwork. You just sign up the policy and see how it goes throughout the year. Livestock risk protection insures cattle and swine solely on a decline in price, so death loss is not accounted for on this policy. There are different endorsement periods, which are different time periods that a farmer can choose to insure the livestock within. And that's usually 13 to 52 weeks, depending on whether it's swine or cattle. And the farmer should choose the time period closest to when they're either going to sell the livestock or they're going to reach the desired weight. Livestock risk protection is subsidized. So as you can see on the chart in the top right, this shows the amount of premium that was generated through livestock risk protection over the years. And you can see from 2016 to 2020, premium was fairly steady. And then in 2021, it just skyrocketed. And I think since then, it's probably still as high as it was in 2021, if not higher. This is because RMA changed the subsidy factors that were involved in here. And so they actually gave farmers an additional 20 percentage points of subsidy versus what it was. So you can see the subsidy chart there on the bottom, where at 70%, you can actually get 55% subsidy on insuring your cattle or swine. One really cool thing about this policy is you can actually get almost all the way up to 100% crop insurance coverage, which most policies do not go up that high with crop insurance subsidy. So it's really nice that you can actually insure the full value of the commodity instead of having to have a deductible on it. Indemnity is triggered on this policy if the actual ending value is less than the coverage price. So here's an example of how coverage is written. So on this top line, this is a 13-week time period for feeder cattle in the steers weight 2 category. There's different weight categories for each different type. So this is steers that are weighing 600 to 900 pounds. And this is a 13-week time period. And I ran these numbers over the weekend. So this is based on the ending date of June 2nd, 2023. So the expected ending value, as you can see in the middle there on that top line, is $203.10-11 per hundredweight. Then right next to that, you can see the coverage price is $202.43 per hundredweight. So the highest coverage level option that's available on this one is the 99.7. So you're virtually covering all the way up to that. And so on June 2nd, when this coverage endorsement period ends, if the price is less than $202.43 per hundredweight, you will trigger a claim. Relay cropping was announced for the first time in 2022, where farmers could relay crop soybeans and still be insured under federal crop insurance. This was available on a case-by-case written agreement basis, depending on the area. In order to submit the written agreements, you needed evidence of practice viability in the region, which is typically from an agronomist or a conservation professional. So each region requires about a different amount of relay cropping history in order to obtain insurance. So here's the map showing what areas need history and what areas do not. So as you can see, Zone 1 does not need any requirement history. They can submit a written agreement and get crop insurance pretty easily. Whereas Zone 3, you need to have 3 years of records showing that you have relay crop soybeans on your operation and how it has worked out for you in order to obtain that crop insurance coverage. Double cropping expanded their coverage in 2023 for both soybeans and grain sorghum. So I just was going to show the maps here quickly. So this allows a farmer to raise 2 crops in 1 year. So the blue areas are where you can get coverage readily available without even having to submit a written agreement. The green areas are where you have to submit a written agreement, but you don't need 3 years of history to get that crop insurance coverage. And then the yellow area is where you can submit a written agreement, but you have to have that history in order to get coverage. TOGA, or a Transitional Organic Grower Assistance Program, which Sarah touched on earlier, offers extra premium assistance for organic farmers. So this, as of now, is only available for 2023, so something to pay attention to and make sure that you're aware of as you're making your coverage elections for the year. And so this allows transitional organic crops to receive an additional 10 percentage points of subsidy on their crop insurance premium. Certified organic crops receive an additional $5 per acre premium discount. And then those that are purchasing a whole farm revenue protection policy receive an additional 10 percentage points of subsidy on those crops. So the whole list of crops are on the bottom there for all the ones that are eligible for, which is pretty much every crop available. So a really good option for organic farmers to get decent coverage and cheapen up their premium. One thing to be aware of is that these premium discounts won't be reflected until the billing statement. So as farmers are going through their coverage elections this spring to see what coverage level they should select for their crop insurance for the year, keep this in mind that it will not reflect a $5 premium acre discount on your quote, but it will show later in the year. So the quotes that you're looking at now will show a higher premium than you will be billed later on. And that was all I had. So I will hand it over to Nate to talk about crop insurance in his operation, how it's helped him, and how he utilizes it.
Sure. Thank you, Megan. That was so worth it to see all of that. I'm really glad I got to be fly on the wall for that presentation. That was really interesting. So thank you for putting that together. My name's Nate Powell-Palm. I'm based out of Southwest Montana, the Bozeman area, and I raise just about 1,200 acres of pulse crops, including yellow peas and spring wheats, as well as flax and forages for my beef herd. I've used multi-peril crop insurance because we have weather events, big ones. I think across the Midwest, it's a much more stable precipitation environment. Montana has a crippling drought all the time. And so if we're trying to figure out how do we stay in business and weather that risk of growing crops in a great area when it rains, we raise some really premium crops that are in demand around the country, especially organic, like our spring wheats. But when the spigot from the sky turns off, it really gets dry very fast. And so I've used multi-peril risk insurance products to mostly get cover against hail and drought. And so this last year was my first year getting issuing a claim. And I was basically made whole by the entire program. We had a pretty sharp drought. It rained a bunch early in the year, and then it got very dry and windy throughout the rest of the summer as we were going into harvest. And with that revenue, we were able to completely make up for the fact that we had a much lower yield and still had our regular inputs of diesel, time, steel, and fertilizer. Didn't know if there were any questions from anybody or any anywhere you want to dive in deeper, Megan.
Well, I do have a question for you. You mentioned that your main perils are drought and hail. Do you purchase hail insurance on top of your multi-peril crop insurance policy?
This year I did not, and I haven't historically, just because Bozeman, while it is in Montana, which has a big hail problem, is not in the hail belt. So we have a hailstorm irregularly, one that actually affects us yield-wise. Versus if you go up north, it's every few years they have a giant wipeout from hail. So I didn't see it as one that was a great bang for my buck for my operation.
Cool. Yeah, I know. And hail insurance is one of those cool things where you don't have to have it set up by a certain date. You just have to have it in place 2 hours before the storm. So if you get really nervous because the weather's looking bad, you can get something done. So that's the benefit to hail insurance.
Hopefully your agent picks up. Yep.
Yeah, that is true. You have to actually talk to an agent. You can't leave a voicemail. That is a stipulation in there.
Exactly. Yes.
Do you want to talk to about how do you go about finding a crop insurance agent that maybe is familiar with organics or an operation like yours?
Absolutely. So I'm based in, like I said, Southwest Montana. I am the only organic grain grower in my county. And so I called up my friends who mostly farm in the northern part of the state, more north central Montana, and just asked who did they use, who's been right for them. And I know a lot of them have used and are very familiar with crop insurance, and they've got agents who are very familiar with crop insurance. And so I actually opted to work with one of the agents up in north central Montana who has just been fantastic and able to give me the inside scoop on how these programs work. We shot what my respective concerns were, what crops I was growing, and she was able to give me a lot of insight into how she's seen it work out best for the longtime producers that she's worked with in the organic space.
Cool. So you talked, sorry, I'm going to ask all the questions today, I guess.
Good.
You talked about how you have pulse crops on your operation. Is revenue protection and crop insurance readily available on them? Or are you having to go other revenues in order to obtain crop insurance on those crops?
Great question. For yellow peas, it was available. I am going to be hopefully growing flax this coming year. So I am going to have to work on a written agreement for that because it is not readily available for my county. But based on your matrix of the like crops, luckily spring wheat is a like or a similar crop to flax. So that is very much what we grow. So it won't be a huge leap getting that written agreement done, I hope.
Perfect. The really cool thing, this is like a side note, but really cool thing with written agreements too, is that like the farmer and the agent work together to fill out the packet, and then they send it to the crop insurance company. And then from there, they will receive an offer as to what crop insurance coverage is going to be available for the farmer. And if the farmer doesn't like the offer, he can actually decline the coverage. And so that's kind of a rare case scenario, which I feel like is kind of just all organic crop insurance, is everything is a little bit different, but the farmer actually has the option later on whether he wants to take it or not, depending on what the offer comes back as. So that's pretty cool.
Yeah, absolutely. I think the other thing I just want to emphasize that you so articulately described was the contract price addendum. What an amazing tool that I have all of my crops contracted, and I want to make sure that I always take that election, because it's usually the contract price is over what the regular organic market price will be. In my case, especially for these more premium crops like organic spring wheat. And it's always just been such a neat assurance that we're going to be able to work with a price that we know, rather than have to take an average of indexes.
Glad to hear you're using it. Wonderful.
Yes, it's great.
Well, I've got a couple of questions to throw in the mix.
Yeah.
So Megan, you mentioned relay cropping as something that has just started to come into insurability in just the last couple of years. Are there practices common to this region, this Rocky Mountain West area, in organics that can cause issues for organic farmer insurability?
Yeah, good question. And the hard part is everything is case by case as far as crop insurance goes. So it seems like most things in crop insurance, there's not an easy answer. So I'd say the biggest thing is to communicate with your agent right away. Try to figure out what you were planning to do and if there is options on it. I talked about written agreements where you can get coverage for a crop that's not available in the county, but that is not the only option that written agreements provide. If you're wanting to try a new practice or like interseeding other crops, a written agreement is a route that you can do. I know one of the big projects I've been working on lately is I have a farmer that wants to plant his corn into peas, and that is not allowed because you can't plant corn into a legume. And so there are certain practices that are not allowed, but I'd say the whole written agreement route, as long as you can prove that you can get a decent yield by going that route and then have a letter of like from an expert in that area that says, yes, this is a good practice, you can grow a decent yield doing that, then you can get insurance on it. There are a few situations that it is a hard no, but it's in the handbook that you have to read in order to figure that out. So I think for most situations, it's just really important to communicate between the farmer, agent, ag advisor, whoever's involved in the conversation up front, so that you make sure that you have crop insurance coverage in place and you're not surprised at claim time that whatever you did throughout the growing season wasn't allowed.
So as I mentioned at the top of the webinar, oats is our core mission is to train ag professionals in organic production methods so that they can better serve farmers. Nate, have you ever worked with an ag advisor of any kind? It could be extension, it could be Center for Rural Affairs, it could be an agronomist that you hired to come out and consult with you. Have you worked with ag professionals, and what do you want them to know about crop insurance?
Great question. I have mostly worked with NRCS folks who have been an amazing resource for agronomy and equip programs and other programming funding. But I've had to rely on my fellow farmers to navigate crop insurance. And so I think one thing I would love is just for agents to know basic anatomy of the organic parts of crop insurance, know that it exists, kind of be able to dispel the myths, and understand, just like Megan so clearly articulated, what the opportunities are with organic. It's a pretty neat thing, and I'm always a little surprised that it's not seen as more of a opportunity for insurance agents to expand their portfolio of clients and just be kind of on the cutting edge, just like my crop insurance agent has been, just being able to provide something that's unique to me so that I would go outside my community to seek out her services just because of that expertise. So I'd say understanding what is different, what the potential is, and then if you're interested in being a crop insurance agent who's carrying organic, or an advisor who is somewhat well versed in organic crop insurance, trying to meet some of those farmers who are well versed in this as well. So you get some anecdotal information that can then be applied when new farmers or new to insurance farmers like me come up with anecdotes and scenarios that they'd like to explore with you.
Question for you. You had mentioned NRCS, and kind of one of the main things that I think of when I think of NRCS and crop insurance is the cover crop termination dates. So NRCS has a whole map, and based on your facial expressions, you're well aware of it, that are the cover crop termination guidelines. Do you plant cover crops on your operation, and have you been following those termination guidelines, and how has that worked for you?
I am in a region that is slightly wet enough to do a lot of cash cropping with a lot of different crop families. So I'm able to do all of my pulse crops, but take them to harvest. My oil seeds, take them to harvest. So I don't do a lot of green manure plow downs. But I was an agronomy researcher for all of undergrad. And so trying to marry those termination deadlines to our water concerns as crop managers has been top of mind for many years for me. But I think that's something that is really very actually well understood by NRCS as it relates to their relationship with extension agents, especially folks who are related to the university and the research farms. And they're getting that word out that there are very hard deadlines for when you need to terminate these crops. And lots of times they're informed just by good practice, good management. Being able to terminate at flowering, say for your yellow peas, if you're using it for green manure, is how you maximally conserve the water and get as much nitrogen as you can. And so there's a lot, I think at least in our sort of Montana ecosystem, those folks are talking, which has been great.
I have witnessed that as well, and I've had many conversations with farmers in Montana that are very concerned about the cover crop termination guidelines. And so I kind of wanted to bring it up because there is an exception to that, where if you get a letter of adaptability, you have to get approval ahead of time, but you might be able to terminate your cover crop later than the crop insurance termination dates. And so that's could be really useful to farmers in your region.
Definitely. Thank you for that. Yeah.
Mallory, you are muted.
Thank you, Megan. Sarah, do you have any questions or any thoughts that you would like to add?
Yeah, so I was going to piggyback off of Megan, but she took it away and did a great job on the cover crop termination guidelines. And I was going to explain that, the same thing that she did about the exception. So if there is a good amount of water in your area and that may, warrant a deviation from those guidelines, that's what they're for. The guidelines are very general overview to serve as an ag expert guidance for those starting out with cover crops. So for those with more experience on their farm and trying to incorporate some new practices, that there is that open door for an exception, and that's what we want. We want people to be innovative and make their farming operation and their crop rotation work for them, and working in cover crops and doing what's best for their ground and with their water resources is what we want folks to do.
Yeah, I think in organic farming, communication is even so much more important than conventional, because you're doing all these different aspects with cover crop terminating and just implementing new innovative practices or new crops into the operation. So it's very important to just communicate up front and make sure all that is in place ahead of time.
Fantastic. Well, we are getting close to time. Are there any other questions or thoughts that any of our presenters would like to offer?
I don't have any final thoughts. Just thank you for giving us this avenue to be able to share the word and what crop insurance coverage options are available for organic farmers as they look. And crop insurance coverage looks way different than it did 10 years ago. So keep everybody up to date, and that there are insurance options available, and there are pretty good insurance options available as well.
Fantastic. Well, thank you all so much for sharing your expertise with us today. And a big thank you to all of you listeners out there who are watching this live and on the recording on YouTube. We will share the webinar recording with all participants by email over the next couple of days. And remember to join the OATS mailing list to get notifications of upcoming organic education programs for ag professionals. Thank you all very much.